So our topic for today is the part 2 of our cash and cash equivalents topic. And our topic revolves around the internal controls over cash, particularly bank recon, proof of cash, and petty cash fund. So sir, why do we say petty cash fund is part of our internal controls over cash? Because petty cash fund uses the imprest fund system or imprest system. And later on, we will discuss what is the imprest fund system and what is the use of that imprest fund as to the internal control over cash. So again, our topic will revolve around these three items. So we start first with bank reconciliation. In bank reconciliation, we try to reconcile the balance of the book and the bank. So this happens if ever our cash is maintained in a bank. So of course, in our record, we have your cash in bank. So per bank, we have this bank statement, which gives you the bank balance. Okay. So before we start, remember that bank reconciliation, the main goal here is the book balance must equal the bank balance. The book balance must equal the bank balance. So in bank reconciliation, our main goal is to balance the book and the bank. So to balance that book and the bank, certain items must be considered. And those items are called book reconciling items and bank reconciling items. Okay. So to reconcile these items, we have your book reconciling items and bank reconciling items. So we have here your book and your bank. So we have your beginning book balance and beginning bank balance, plus the items of receipts, less the items of disbursement will give us your ending book balance. This ending book balance normally is known as your unadjusted book balance. Unadjusted book balance. For the bank, it's still beginning bank plus receipts less disbursement will give us your ending bank balance. This ending bank balance is known as your unadjusted bank balance. Unadjusted bank balance. Now, these items of receipts and disbursement, we have other terms that we use to indicate receipts or disbursement. So for book, receipts is also known as debit. Disbursement is known as credit. Therefore, when we say book debit, it means book receipts. Book debits means book receipts. Book credits means book disbursement. Book credits means book disbursement. For bank receipts is known as credit. So bank receipts is known as bank credits. Bank disbursement is known as bank debits. Okay, so sir, why do we call the receipts of your bank as credit and the disbursement as debit? So remember, we have here your book. Book has an asset over the bank. Book has an asset over the bank. That is in the form of cash. The bank in turn has a deposit liability over the book. The bank in turn has a deposit liability over the book. So the deposit liability is, of course, a liability. What is the normal balance of your asset? Debit. The other side, credit. What is the normal balance of your liability? Credit. The other side is debit. Therefore, if you want to increase your book, we debit it. So debit receipts. If we want to increase your bank, we credit it, credit receipts. How about if ever we want to decrease our book, we credit it, credit disbursement. If we want to deduct or disburse in our bank, we debit it. So debit, disburse. Okay, so that's why your bank receipts is known as bank credit and your bank disbursement is known as bank debit. So please familiarize yourself with the debits and credits as to the book and your bank. Because normally students, even though they know how to properly uh, reconcile the book and the bank and use the proof of cash, if ever they don't know the different terms as to your book disbursements and book receipts, bank disbursement and bank receipts, mali pa rin yung makukuha ninyong ending balance. Okay, so those are the items that first we need to understand regarding the beginning balance and the ending balance. So in case the problem will ask you what is the unadjusted ending balance and the unadjusted bank balance or the beginning book balance and beginning bank balance. So you just need to use this formula in case we want to find an item. So beginning book, receipts is the unadjusted receipts, disbursement is the unadjusted disbursement. Now we go to the different items that will reconcile book and your bank. We start first with your book reconciling items. We start first with book reconciling items. Okay, so what are your book reconciling items? First, we have your credit memos. Next, we have your debit memos. Okay, so what are credit memos? These are memorandums from the bank which increase your bank balance. However, it is not yet recorded by the book. These are credits by the bank which increase your bank balance, however, not yet recorded by the book. So why is it called credit memo? Remember, credit in the bank means receipt in the bank. So here in your credit memos, there is a receipt in the bank, however, not yet recorded in the book. So why is it a reconciling item? Because again, we need to equalize the book and the bank. So what is credit memo? In your credit memo, we have here an increase in the bank because there is a credit. We have here an increase in the bank because there is a credit. So to equalize, what should you do? You should also increase the book. So you need to debit the book. Okay, so credit memos are credits or receipts in the bank not yet recorded by the book. How about debit memos? Your debit memos are disbursements by the bank. However, it is not yet recorded by the book. Therefore, what did the bank do? Bank debited your bank account. So if that is a debit, decrease. So to reconcile the book, what should you do? You need to decrease also the book. That is a credit. So these are your reconciling items. So if ever you have a credit memo, what will you do to the book? You increase the book. Debit memo, you decrease the book. Why? Because again, we said we need to equalize whatever the bank did. So the bank increased your account without you knowing it, then you increase your book balance also. The bank decrease your account without you recording it yet, then you also need to decrease your balance in the book. Okay, so I just want you to know the reason why we need to increase our book balance or decrease our book balance in case there is a credit or debit memo. Please do not be wag kayong malito kung bakit credit yan ay kailangan nating idagdag. Okay? Credit because bank credits your account. So you need also to increase your account. Credit in the bank is increased, debit in the bank is decreased. Clear? So again, our rule here in bank reconciliation, you just follow or equalize the items that are made by the book or the bank. Okay, so those are your book reconciling items. We go now to your bank reconciling items. bank reconciling items. So, ano ba yung ating mga bank reconciling items? So, first and second, we have your deposit in transit and we have your outstanding checks. Okay, what is a deposit in transit? A deposit in transit is a deposit made by the book. However, it is not yet reflected by the bank. In short, book wants to deposit to the bank. However, the bank did not yet clear that deposit. So, deposit in transit nowadays does not really happen because deposits are real time now with the invent of the technology. However, at some point, you can still encounter deposit in transit in your workplace soon. That is because some checks, if deposited, really awaits clearing, especially if you deposit a check later than the bank's clearing time. So for example, the clearing time of the bank is until 1 p.m. only. You deposit a check 2 p.m. So you will wait for the check to be reflected on your bank account the next day. Ganun yung nangyayari. So pwede pa rin magkaroon ng DIT, especially if what you deposit is a check awaiting for clearing. Okay, so again, what is a DIT? Deposits made by the book, not yet reflected by the bank. Kanina, di ba, dun sa book reconciling items, these are items reflected in the bank, not yet in the book. Kaya nga siya tinawag na book reconciling items. So you just need to adjust the book. Now, in your bank reconciling items, these are items reflected in the book, not yet reflected by the bank. These are items reflected in the book, not yet reflected by the bank. So the book has a deposit in transit, meaning book deposited to the bank. However, in our bank statement, it did not yet appear. We call that deposit in transit. So in our book, what did we do? We increase our account. So plus or debit. So what should the bank do to equalize what the book did? So the bank needs to increase also their account. So credit. Okay, credit. How about outstanding check? Outstanding check. For outstanding checks, these are checks issued by the book, however, not yet cleared by the bank. So per our books, ano nang meron? Nabawasan na yung ating balance. Pero sa bank, nabawasan na ba yan? Hindi pa. Kasi nga sabi natin, a bank reconciling item is an item which is already reflected by the book but not yet reflected by the bank. So kung binawasan natin yung book, ano yung gagawin ni bank? Kailangan niya ring bawasan. So debit it. So ito yung mga gagawin naman natin sa bank. So what is the effect of a credit memo? It increases the book. What is the effect of a debit memo? It decreases the book. What is the effect of a deposit in transit? It increases the bank balance. How about the outstanding check? It will decrease the bank balance. Take note, what are the items affecting the book only? Credit and debit memos. Therefore, guys, if ever a problem asks you what are the journal entries relating to the bank reconciliation, your journal entries will only come from your book reconciling items because those items are reflected in the book. Sir, how about EDIT and outstanding check? Why don't we need to adjust our books? We do not need to adjust our books for DIT and outstanding checks because, again, in the first place, it was already placed in our book. It is already placed in our book. It is not reflected by the bank. Therefore, we do not need to double our entries because if ever we still make an entry as your DIT and outstanding check, what happens here is there will be a double deposit and a double disbursement. And we do not want that because that will be an error. Okay, so again, we need to look what are the items that affect the book and the bank as to your reconciling items. You call them credit memos, debit memos, DIT, outstanding check. So for credit memos, ang kailangan nyo lang ditong isipin is, merong dinagdag si bank dun sa account ko, hindi ko pa na-record dito sa book ko. Ano ba yung mga normally na dinadagdag ni bank sa account mo? Pag nag-earn ng interest. Ano pa, sir? Pagka merong kinolekta yung bank in behalf of the company. Ano pa ba? If ever may proceeds yung loans mo, pwedeng idiretso rin sa bank. those are credit memos. Basta anything na halimbawa, doon sa book, di ba, may mga naka-deposit ka. So, titignan mo yung mga book deposits. Titignan mo yung book deposits. Tapos, titignan mo yung bank deposits. Isa-isahin mo yan. So, let's say January 1, January 15, January 30, January 1, January 15, January 20, January, yan lang. Halimbawa, yan. Okay, so this is 10,000, 15,000, 20,000. 10,000, 15,000, and 15,000. Okay, so halimbawa ganyan yung nakalagay. Assuming hindi sinabi na nagkaroon ng error. So titignan mo yung mga deposits. So pumasok na ba yung 10,000? Meron na. Pumasok na ba yung 15,000? Meron na din. Yung 20,000 na January 30, pumasok na ba? Hindi pa. So, ano yan? Meron na sa book, wala pa sa bank, di ba? Meron na sa book, wala pa sa bank. Ano din ang tawag natin dito sa 20,000? Ang tawag natin dyan ay deposit in transit. Doon naman tayo sa bank. But wala yung 15,000 kay book. Okay, assuming na hindi yan error, ano yung 15,000 na yan? Anong ginawa ni bank? Dinagdagan niyo yung account mo. Hindi pa nadagdag ni book. Anong tawag natin dyan? Ito naman yung credit memo. Yun naman yung credit memo. So, ano yung tinitignan natin dito sa credit memos and deposit in transit? Tinitignan natin yung items of deposits. Tinitignan natin yung items ng deposits. So, for book, we call that your book debits. And for bank, we call that your bank credits. So, we need to look for the items of book debits and bank credits. And we need to reconcile those items. And if ever may natitira doon, so sa book natin may natira na 20,000, assumption natin, DIT yon. Sa bank natin, may natira na 15,000, assumption natin na credit memo. Except if sinabi niya yung 15,000 ay error, edi hindi yan credit memo. Ganun lang naman siya. Okay? Okay? So, tignan lang ninyo yung kung anong mali na ginawa kung anong wala sa book at kung anong wala sa bank. That's for credit and DIT. How about for debit memos and outstanding check? So we have here your book disbursements and your bank disbursements. So, assuming nag-disburse ka pala nung January 2 ng 20,000, January 18 at January 40 daw, 30. Tapos yung bank disbursements mo, ito, January 3, 20,000, January 18, 30,000, and then January 25, 10,000, January 30, 10,000. Okay. So, again, titignan natin yung mga differences nila. 20,000 meron na ba? Meron. 30,000 meron. 10,000 January 30. Siyempre, tignan mo yung malapit na date. January 30 yan or January 31. Okay. So, dun sa book disbursement, may natira ba? Wala. Therefore, wala kang outstanding check. How about in a bank disbursement? May natira ba? Yes. Eto. Ano yung tawag natin dyan? Yan naman yung debit memos. Debit memos. Okay? So, if ever your problems provide for items of book and your bank as to your debits and credits. So, ang gagawin ninyo, i-check nyo lang yung mga items na yun. I-check nyo lang yung mga items na yun. Tapos, signan nyo kung ano yung mga natira. Yun yung either deposit in transit mo or credit memo for your deposits. And for disbursement, that can be your outstanding check or debit memos. Okay? So, questions? So, after knowing the items of bank reconciliation, book, and bank reconciling items, we go now to the 3 types of bank reconciliation. So, the 3 types of bank reconciliation are, first, you have your adjusted balance method. So, in your adjusted balance method, we need to get the adjusted balance of cash. Next, we have your book-to-bank method. So, in book-to-bank method, we need to get the unadjusted bank balance. Unadjusted bank balance. Okay, so sir, why do we need to get the unadjusted bank balance in the book-to-bank method? So from your book balance or book unadjusted balance, we need to get the unadjusted bank balance. Okay, so here we do not get the adjusted balance. What is unknown here is the unadjusted bank balance. So in case, guys, the question on a problem requires you to compute the adjusted balance of cash, you use adjusted balance method. But if ever the question in the problem relating to bank reconciliation is the unadjusted bank balance, you use the book-to-bank method. You use the book-to-bank method. Another type is your bank-to-book method. Bank-to-book method. When do we use your bank-to-book method? We use your bank-to-book method if we are to compute for the unadjusted book balance. If we are to compute for the unadjusted book balance. Guys, I know your textbooks or some of the textbooks really prepare the whole formula for adjusted balance, book to bank, and bank to book. But I just want you to memorize one formula. Or actually, you don't need to memorize the formula because you already know why credit and debit memos are the book reconciling items and why are your deposit in transits and your outstanding checks considered as your bank reconciling items. So we have here your unadjusted book and unadjusted bank. So what are the book reconciling items? So plus credit memos less debit memos. Okay, so we have your adjusted book balance. For the bank, we have your unadjusted bank plus deposit in transit less outstanding checks. We have your adjusted bank balance. We have your adjusted bank balance. Okay, so if ever we are to get for the adjusted book and adjusted bank, we are using adjusted balance method. Adjusted balance method. Clear? Okay. Now, if we are using bank to book method, what you need to get is the unadjusted bank. So bank to book. Okay. So you start with unadjusted bank. So this is your first step until you get for the adjusted bank balance. Until you get for the adjusted bank balance. Whatever is the adjusted bank balance, you place it also here in your adjusted book balance. Sir, why? Because again, in bank reconciliation, your book balance will equal the bank balance. Your book balance will equal the bank balance. So if ever, after adjusting the bank, whatever is the balance here will be the balance in the book also. And then you just plot the credit memos and debit memos, work back, you get the unadjusted book. Okay? You get the unadjusted book. That's why, formula nung binibigay sa inyo, unadjusted bank plus DIT less OC plus debit memo less credit memo. Ganun yung ginagawa ninyo. Kasi nga, ang process talaga is from bank to book, bank first, here, you start, you get your adjusted bank balance. After getting your adjusted bank balance, the balance in your adjusted bank balance is also the balance in your adjusted book balance. And then you work back to get for the unadjusted book. Rather than memorizing the formula na plus DIT less OC plus debit memos and credit memos. Either way, you will get the same answer. I just want you to focus in one formula which shows the adjusted balance. Okay? So, kaya meron tayong book to bank or bank to book. Kaya rin ganun yung formula. Okay? So, bank to book. We start from the bank until we work back to your unadjusted book. From bank to book. Again, when do we use bank to book? If we are looking for unadjusted book balance. If we are looking for unadjusted book balance. How about if we are using book to bank? If that is book to bank naman, edi kabaliktaran naman nung bank to book. You start from the unadjusted book until you get the adjusted bank balance. And then whatever is the adjusted book balance, it is also the adjusted bank balance. And then you just work back to get for the unadjusted bank. Okay? So sobrang dami na nating arrows. Tanggalin muna natin yung mga arrows na yan para mag-gets pa rin natin siya. Ayan. Okay. So you need to work back from unadjusted book to your unadjusted bank. Okay. So take note, whatever you compute as the adjusted book balance is also the adjusted bank balance. So kung ano na-compute mo dito, so yun din yung ilalagay mo sa adjusted bank balance. Kailan lang uli natin gagamitin yung book-to-bank method? Pagka ang hinahanap natin is unadjusted bank balance. Okay. Pag tinanong ng problem, what is the adjusted balance of cash? Ang gagawin ninyo, ang gagamitin ninyo, adjusted balance method. What is the unadjusted bank balance? Ang gagamitin ninyo, book-to-bank method. Pag tinanong, what is the unadjusted book balance? Ang gamitin ninyo, book-to-bank method. Ay, bank-to-book method. Sir, meron bang chance na hinahanap yung adjusted balance and at the same time hinahanap yung unadjusted bank or unadjusted book? Meron. So pagka ganun, guys, halimbawa ang tanong is, what is the adjusted balance of cash? And then tinanong, what is the unadjusted bank balance? E di, anong una yung gagawin? You get for the adjusted book. You get first for the adjusted book. Kasi sabi nga natin, whatever is the adjusted book is also the adjusted bank. Assuming na tama lahat yung ginawa ninyo. Assuming tama yung process ninyo, syempre. And then, after getting your adjusted book and the adjusted bank, you can now work back and get for unadjusted bank. Okay. Ganon, pagka ang tanong is first adjusted balance of cash and unadjusted bank. So, pwede rin bang first tinanong is adjusted balance of cash, tapos tinanong yung unadjusted balance of book? Pwede rin. E di kunin nyo muna yung unadjusted bank until makuha nyo yung adjusted bank balance. Tapos, you work back to get for the unadjusted book. Okay? We go now to errors. Errors. For errors, it is a book or bank reconciling item depending on who made the error. So this depends on who made the error. Okay? So if the error was done by your book, then you adjust in the book. Adjust in the book. Okay? If the error is made or done by the book, then you adjust in the book. If the error is made or done by the bank, then you adjust in the bank. Okay? So for errors, you just need to determine who made the error. Is it the book or the bank? Is it the book or the bank? And it is based on your analysis on what is the effect of the book, what is the effect of that error on the book and on the bank. Okay? So if ever, sabi nung problem, you wrote a check worth 5,000 pesos for 500. So what is a check? That is a disbursement. Disbursement. So for disbursement, let's say it should be 5,000, but you only wrote it at 500. So you have an understatement of disbursement. So kulang yung disbursement mo. So anong kailangan mong gawin kay book? Eh di kailangan mong bawasan yung cash ng 4,500. Ganon. Okay? So just take note, if ever that is a disbursement, to check it, whatever was made, you need to add back. Whatever was made, you need to add back. Whatever is the correct entry, you need to deduct. So for disbursements in the book, if ever that is an error, whatever was made, you add back. The correct, you deduct. So ano yung ginawa niya dito? 500, di ba? 500. Yun yung ginawa niya. Ano yung correct? 5,000. So you deduct the 5,000. So anong net adjustment mo? 4,500. Okay? Ito yung tinuturo ko normally sa estudyante ko kasi minsan nagkakamali sila sa signs. So instead of negative 4,5, ang nalalagay nila is plus 4,5. Kasi once na nagkamali ka sa signs, mali rin uli yung reconciliation mo. Mas sure kasi pagka ganito. Pag disbursement, kung ano yung ginawa, i-add back. Kung ano yung tama, yun yung i-deduct. So kahit pa over disbursement yan. So for example, the correct is 500. And what you recorded is 50,000. What you recorded is 50,000. So what should be your adjustment? This is an overstatement of disbursement. Overstatement of disbursement. Now, if there is an overstatement of disbursement, what should we do? We need to increase our cash. By what amount? 50,000 less 500, 49,500. 49,500, di ba? So you need to add 49,500. So paano kung nalagay mo negative? Eh di mali ka. So ang kailangan mo, again, what is made by the book? Nag-disburse siya ng 50,000. Add back. Ano yung correct? 500. Yun yung i-deduct. So less 500. Okay. That is on the error of disbursement. So whether the disbursement was made by the book or the bank, ganito yung gagawin ninyo. What is made or done by the book or the bank, you add back. Whatever is correct, you deduct. Add back, deduct. Okay? So that is for disbursement. Disbursement. So what is add back and deduct. Okay? How about if ever it is a receipt? It is a receipt. Whatever was the receipt made, you deduct. And the correct one, you add back. Okay, example, receipts. So assuming the bank added on your receipts 500,000 pesos. But actually, it is only 50,000 pesos. So the bank recorded 500,000 pesos. The actual is 50,000 pesos. What is this? Overstatement or understatement? Overstatement. Kasi nga, 50,000 lang dapat. Pero anong ni-record niya? 500,000. So, over is statement. Okay. So, if there is an overstatement of receipts, what you need to do? You need to decrease your cash. By how much? By 450,000 pesos. So, decrease cash 450,000 pesos. So, let's see. We use our formula. Ano yung ginawa niya? Nag-record siya ng 500,000. Deduct. Yung actual, 50,000. So, anong net nito? 450,000 negative. Okay, another one. Let's say the book recorded 300. Ito yung mas pangit na problems. Yung 333, yung hindi siya exact number, medyo mas mahirap siyang magbawas-bawas, gano'n. So, mas okay na pag ginamit nyo yung eto. Okay. So, let's say 3346. Tapos, ang na-record niya is 3643. Ang recorded niya, 3346. Ang actual niya ay 3643. Okay, so what is the effect on the receipts? Understatement. If there is an understatement in the receipt, what should you do? What should you do? You need to add back, so increase. Increase by what amount? I don't know. So first, we need to get the value. So what is made or recorded? 3346. What is the actual? 3643. So, what is the net amount? 3346 less 3643. We have 297. Tama ba? 297. Okay, so you need to increase it 297 at 297. Again, if ever it is an error, guys, you just need to know who made the error. Is it the book or the bank? And whoever made the error, dun ninyo siya i-increase or i-decrease. So what is the effect of a disbursement error? So if ever that is a disbursement error, pwede naman ninyong i-memorize na lang pagka understatement yan, you need to deduct. If understatement of disbursement, you need to deduct. If that is an overstatement of disbursement, you need to add. If that is an overstatement of receipt, you need to deduct. If that is an understatement of receipt, you need to add. Or, so that you can really understand whether you need to add or deduct, you can make use of this one by getting first what should be done. That's the correct one. And what is done? That was the recorded one or made by the book or the bank. This applies both to book and the bank as to errors on disbursement and receipts. Okay, just place the correction on the error on whoever made the error, whether that is book or the bank. So we're done now discussing your bank reconciliation, and we know now how to treat the items regarding your bank reconciliation with regard to the book and bank reconciliation and the errors. We go now to the next internal control over cash, that is our proof of cash. So under this proof of cash, this is a 2-month bank reconciliation. 2-month bank reconciliation. So it involves the reconciliation not only of a particular month, but it is composed of 2 months at least. Sir, can it be 3 months, 4 months, 5 months, 6 months? Yes. Before I gave a problem, 3-month bank reconciliation. Yun na yung pinaka-max na naibigay kong problem so far. So, but proof of cash normally is done for a 2-month bank reconciliation. So in a proof of cash, we do not only adjust the book and bank balance, but we also adjust the book and bank receipts and disbursement. Okay, so in a proof of cash, since it is a 2-month bank reconciliation, maybe you're thinking, we just reconcile 1 month and another month. That's why it's 2 months. However, in a proof of cash, we don't just adjust those items. We also adjust the receipts and disbursement of both the book and the bank. So a while back, I already presented to you how to compute for the beginning unadjusted book balance and the ending unadjusted book balance, including the beginning unadjusted bank balance and the ending unadjusted bank balance. So let's just have a quick recap as to the formula of your book and bank. So we have here your beginning book balance plus book debits less book credits. This will give you your ending book. And then we have your beginning bank plus bank credits less bank debits. You will get your ending bank. We also said that book debits and bank credits are known as your receipts, and your book credits and your bank debits are known as your disbursements. Okay, so receipts and disbursements. So in a proof of cash, we just don't adjust this beginning balance and the ending balance. Why? Because the beginning balance is, of course, the first month. The ending balance is the second month. Okay. So in a proof of cash, again, take note, we don't just adjust the beginning and the ending. We also adjust the receipts and disbursement. Hence, we need also to look what is the effect of the book reconciling items, book reconciling items, and your bank reconciling items, to your receipts and disbursements. Okay, so again, guys, we don't only treat these items to get for the adjusted beginning and ending. We also treat these items now to compute for the adjusted receipts and disbursements. So normally, in a proof of cash problem, you will be faced with these different questions. What is the adjusted beginning balance? What is the adjusted ending balance? What is the adjusted receipts and the adjusted disbursements? Okay, so we try to take a look on the pro forma proof of cash. Pro forma proof of cash. So we have here your book. Okay, so we have here beginning, receipts, disbursement, and then ending. So we have here your unadjusted balances. You just need to place first your unadjusted balances on these items. And then after placing your unadjusted balances, we go now to your different reconciling items. Okay, so what are your book reconciling items again? We have your credit memos and your debit memos. Since we are to get for a 2-month bank reconciliation, you also have 2 months credit memos and debit memos. So we have here credit memo first month and credit memo second month. What is the effect of a credit memo? Again, a credit memo increases the balance of the book. So since this is the first month, the beginning is the first month. The ending is the second month. A credit memo increases the book. So first month increases the balance of the book beginning. Second month increases the balance of the book ending. Now, we need to take a look as to the effect of that credit memo first month and credit memo second month as to your receipts and disbursement. So we start first with your credit memo first month. Okay, so if you have a credit memo, take note, where do we see your credit memo? Based on the bank statement. Now, if you prepare now a bank reconciliation, when will you learn about your bank statement? Siyempre guys, in normal practice, saka lang naman natin makukuha yung bank statement. Halimbawa, January ngayon, kailan natin makukuha yung bank statement? Next month pa, February. Diba? February. Tapos diba nasabi ko rin kanina, na pagka book reconciling items yan, kailangan mong mag-adjust sa book. So, kailangan mong mag-record, guys. So, pag magre-record ka, kailan ka magre-record? January ba or February? Siyempre, at the time na nalaman mo, which is February. So, yung credit memo ng first month, anong ginawa natin? Idadagdag natin yan sa beginning, di ba? Pero, anong ginawa mo during the period? Kasi itong, guys, itong receipts and disbursement pertains to the second month. Receipts and disbursement pertains to the second month. Okay, so I have here beginning on the first month, a credit memo. Now, anong ginawa mo nung second month? Anong ginawa mo nung second month? Doon mo lang nalaman na may credit memo ka. Di ba, to record the credit memo, what is your entry? You debit, cash in bank, and then you credit whatever is that credit memo. Kung interest income, edi interest income, halimbawa. Ayan. So debit cash in bank, credit interest income. So your credit memo is an increase on your beginning balance. Now, what is the effect on your receipts? So kung January yan na credit memo, January credit memo, you will learn only the January credit memo on February. Therefore, the recording was made on February. So in short, it must be part of our beginning balance. However, it was placed as receipts during the period. So kung January tong beginning, nalagay siya sa receipts ng February. Tama ba na receipts siya ng February? No, because it must pertain or be recorded on January. However, it was included on February. So what should we do? The receipts here is overstated, therefore, we need to decrease it. Okay, so ulitin natin yung credit memo. So nung credit memo first month, credit memo, alam naman natin yung effect na. Ini-increase niya yung ating balances. However, we need also to take a look on what is the effect of that credit memo over our receipts and disbursement. So we start first with your credit memo first month. So Assuming you have a January credit memo, when will you learn about the January credit memo? The succeeding month, which is February. Therefore, magre-record lang tayo nung February. Anong entry natin on February? Debit cash in bank, credit, interest income. So anong ginawa mo nung February? In-increase mo yung cash in bank. Anong ginawa natin? In-increase natin yung cash in bank. So ang increase natin ay debit. Debit is receipt. Debit is receipt. So, in-increase mo daw yung receipt. Tama ba na in-increase mo yung receipt ng February? Hindi. Kasi nga, para sa January yan. So, anong kailangan natin gawin? Bawasan natin yung receipts ng February. Because that receipt does not pertain to February. It pertains to January. Okay? Credit memo, first month. How about credit memo, second month? Remember, the effect of a credit memo, it increases your book balance. So, ayan, dinagdag natin yan sa end, the second month. Now, we need to know what is the effect of that credit memo over our receipts and disbursement. Over our receipts and disbursement. Okay. So, if ever that is a credit memo second month, that is a February credit memo. Tama? February credit memo. Kailan lang natin malalaman yung February credit memo? March. March. Next month. So, kailan lang natin ni-record? Noong March. It was only recorded during March. Pero kailan dapat natin i-record ulit? Noong February. Eh, hindi siya naka-include sa receipts kasi nga naka-include siya noong March. Okay? So, mare-record lang siya noong March pero dapat for February. So, hindi pala yan nakadagdag sa receipts natin noong February. So, anong effect niya sa receipts? Receipts on February is understated on the credit memo second month. Therefore, what should you do? You need to increase your receipts. You need to increase your receipts. Clear? Nasundan yung effect of the credit memo over the receipts during the month. Okay. Next, we go to your debit memo. Debit memo, first month, and then debit memo, second month. Okay. So, what is the effect of a debit memo again? A debit memo decreases the book balance. So, since this debit memo first month pertains to first month, we need to decrease our first month. And the debit memo second month pertains to second month, we need to decrease our second month. Okay? Okay. Now, after knowing the effect of the debit memo first month and second month on the beginning and ending balances, we go now to the effect of your debit memo as to your receipts and disbursement. Debit memo is disbursement of the bank. Therefore, it should only affect the disbursement of the book. Okay. While credit memo are receipts of the bank. Therefore, it will affect only the receipts of the book. Okay. So, napansin niyo kanina sa credit memo, lahat ng effect ng credit memo nasa receipts lang. Ngayon naman sa debit memo, mapapansin niyo na lahat ng effect ng debit memo nandito lang mamaya sa disbursement. Okay. I-analyze natin kung anong effect ng debit memo. So, debit memo first month. Anong meron dito sa debit memo first month? Saka lang natin malalaman na may debit memo nung January sa February. So, kailan mo lang ni-record yan? Nung February. It was only recorded during February. Question, is it for February? Is it for February? No. Therefore, since naka-record yan, ibig sabihin nakadagdag siya sa disbursement mo, it was included as a disbursement during February, but it pertains on the month of January. So what is the effect? Your disbursement is overstated. Your disbursement is overstated. Since your disbursement is overstated, kailangan nating bawasan. So what is the effect of your debit memo on the first month? It will decrease the disbursement on the second month. So it will decrease the February disbursement. How about your debit memo second month? Debit memo second month. So a debit memo second month, that is a debit memo on February, for example. When will we learn about the debit memo on February? We will learn about it only on March. Only on March. Therefore, we will only record that debit memo on March. So, does it pertain to February? The answer is yes. However, it is not included as a disbursement during February, but included in March. So what should we do? It is not included now as a disbursement. So it means that your disbursement is understated. It being understated, what should we do? We need to increase our disbursement. We need to increase our disbursement. Okay? After that, you can already compute for the adjusted balance of the beginning, receipts, disbursement, and ending of the book. Okay, I hope you understood the reason why we need to increase or decrease your receipts or increase or decrease your disbursements. Okay, that's for the book. We go now to the bank. We go now to the bank. So still we have your beginning, we have your receipts, and we have your disbursement, including the ending bank balance. So beginning plus receipts plus disbursement will give you your ending. And what are the bank reconciling items? We have your deposit in transit and outstanding check. Deposit in transit and outstanding check. So we just need to plot first any unadjusted balance of the receipts, disbursement, and the we try to compute for the ending unadjusted. And since this is a 2-month bank reconciliation, we will use 2 months. So DIT first month, DIT second month, OC first month, OC second month. Okay. OC first month and DIT first month. So what is the effect of a DIT again? DIT increases the bank balance. So what are the bank balances here? Beginning balances and ending balances. So we place it there. DIT increases. So since DIT increases the balances, we need now to know the effect of those increases as to the balances on your receipts and disbursement. So DIT is a deposit of the book. Therefore, ano lang yung maapektuhan ng DIT? Receipts lang din ni bank. Receipts lang din ni bank. Okay. So DIT first month. If that is a DIT on January, when will the bank know about the DIT? Siyempre, next month, February. The DIT will only be presented by the bank on February. So it is recorded in the bank as a deposit on February. Is it right? Or is it really for February? Does it pertain for February? No. The answer is no, because it is for January. Meaning, a receipt for January was included as a receipt in February. So what is the effect of this one? The receipt on February is overstated. Receipt on February is overstated. The receipt on February being overstated, we need to decrease our receipts. We need to decrease our receipts. Okay? How about our DIT second month? DIT second month, no problem. Regarding your DIT second month, we place it already on your ending balance. But what is the effect of your DIT second month on your receipts? So if that is a DIT second month, February DIT, it was only recorded by the bank on March. Does it pertain to February? Yes. However, it is not recorded during February, but it was recorded during March. Therefore, receipts on February is understated. Receipts on February is understated. The receipts on February being understated, we need to add some receipts on February pertaining to the second month. Okay, so I hope we're clear here regarding your receipts as to the effect of your DIT first month and DIT second month. How about OC? How about OC? For your OC, remember, outstanding check is a bank reconciling item which decreases your balances. So you need to decrease your beginning balance and decrease your ending balance. Now, after decreasing your beginning balance and your ending balance, what now is the effect of your OC as to your disbursement? Because check is a disbursement by the book, therefore, it should be recorded as a disbursement by the bank also. So let's try to analyze the items. So we have here a January outstanding check. It is only recorded by the bank on February. It is only recorded by the bank on February. Is it right that it is recorded during February? The answer is no, because the outstanding check pertains to January. Therefore, disbursement on February is overstated. Disbursement on February is overstated. Why? Because you included it as a disbursement on February. You recorded it as a disbursement on February. But it should not be recorded as a disbursement on February, but recorded as disbursement on January. Okay, so our disbursement is overstated. Therefore, we need to decrease our disbursement. How about the February outstanding check? February outstanding check or the second month outstanding check. So the February outstanding check will only be recorded on March. It will be recorded on March, but it pertains to February. But it pertains to February. Okay. So since it pertains to February, disbursement on February is understated. Why? It is recorded on March, but it should be recorded on February. It was recorded on March, but it should be recorded on February. Okay. So what should we do? Since disbursement on February is understated, we need to add additional disbursement pertaining to the second month. After we do those items, or after we're done with the adjustments as to your receipts and disbursement, including the beginning and ending balances, we can already get your adjusted balances as to beginning, receipts, disbursement, and your ending. Okay? And guys, since this is a 2-month bank reconciliation, the rule is whatever is the book beginning balance, adjusted beginning, adjusted receipts, adjusted disbursement, and adjusted ending, it must also equal the bank adjusted beginning, adjusted receipts, adjusted disbursement, and adjusted ending. Okay. So that is proof of cash. That is proof of cash. So we're done discussing now your bank reconciliation and proof of cash. We go now to the last item of our internal control over cash, that is your petty cash fund. So under your petty cash fund, we use your Impress system. What is the Impress system? Under your Impress system, checks collected or checks received are immediately deposited, and checks or any payment of disbursement should be through checks. So if ever you have received anything, whether that's check or cash, you must immediately deposit it. If ever you will disperse, you use your checks. That is under your Impress system. Now, under your petty cash fund, remember, petty cash fund is a fund set aside for petty expenses. So when we say petty expenses, these are small business expenses. And under your petty cash fund, we have two methods to account for it. That is either impress fund system or fluctuating fund system. When we say impress fund system, your petty cash fund will not decrease or increase unless there is a change as to the amount of the fund. Impress fund system, your petty cash fund balance will not increase or decrease unless there is a change on the amount of the fund. While your fluctuating fund system, every time there is a petty expense, it will decrease. Every time there is a petty expense, it will decrease. Again, impress fund, it will not increase or decrease unless there is a change as to the value of the fund, meaning you will increase the fund or you will decrease the fund. While fluctuating fund system is used whenever you record your expenses always. Therefore, your fund will always fluctuate over your petty expenses, So what are the differences of the two? So impress and fluctuating. So at the time of setting aside the fund, so at the setup of the fund, our entry is debit, petty cash fund, credit, cash, or cash in bank. So the same, debit petty cash fund, credit, cash, or cash in bank. Now, incurrence of expenses. So what do we mean whenever we incur expenses? So we get an amount from our fund and we use it to defer our expenses or to pay our expenses. So what is our entry under Impress? No entry. Why? Take note, Impress system will only increase or decrease if there is a change as to the amount of the fund. While for fluctuating fund system will increase or decrease both on the change on the amount of the fund and also whenever we incur expenses. So at the time of incurrence of expenses, our entry is debit, expense, and of course you credit petty cash fund. How about our replenishment? What is the amount of our replenishment? But before we talk about what is the amount of the replenishment, we discuss first what is replenishment. Replenishment is the process of replenishing the fund or replenishing your petty cash fund or placing an amount on your petty cash fund on the expenses already incurred. So you just change the expenses by your cash again so that your petty cash fund has a value or has an amount to be used again for your future petty expenses. So you try to replenish the fund, you place money again on the fund. So under your replenishment on your Impress, take note you did not record any expenses. Normally, your replenishment under your Impress is equal to your expenses. So your replenishment entry is debit, expenses, credit, cash in bank, or cash. While in your fluctuating, it is recorded this way: debit, petty cash fund, credit, cash in bank. As you can see, since here in Impress, there was no entry as to the expense, now the expense will be entered in your replenishment. So it's as if we will make a one journal entry for this month, as you can see, pag tinanggal natin both yung PCF, ang matitira lang talaga ay yung expense at saka cash in bank. So the main difference is that in Impress, expenses are only recorded upon replenishment, and under fluctuating, expenses are recorded every time you incur expenses. Impress kasi nagpapa-impress yung balance niya. Kung ano yung balance niya, ayaw niyang mabawasan. Kaya Impress. Fluctuating kasi nag-fluctuate yung balance niya. Nag-fluctuate kasi every time may expense, nababawasan siya. Sir, question. What if there is no replenishment? It is already the end of the month. There is no replenishment under Impress system. What should we do? Should we not record the expenses? If there is no replenishment under Impress, no replenishment under Impress, you will record the total expenses as a decrease over your petty cash fund. So debit expenses, credit petty cash fund. So it is already the reporting period, assuming it is the end of the month. Now, there is no replenishment. If you will not record the expenses, of course, there will be an understatement of your expenses. So what should we do? What should you do? You debit expenses and you credit petty cash fund. Okay. So, sir, how about in fluctuating? If there is no replenishment, what should we do? Nothing. None. Why? Because, again, the expenses was already previously recorded. The expenses was already previously recorded. Okay? Now, a problem happens if ever the amount in your fund is not the same with your accountability as to the fund. So dito na pumapasok yung cash counted at cash accountability. So what is your cash counted and cash accountability? So your cash counted is the amount of cash and expenses counted from the fund. Okay, it is the amount of cash and expenses counted from the fund, while cash accountability is the amount of petty cash fund set up. It is the amount set up as petty cash fund. So, for example, we are to set up 15,000 petty cash fund. Our cash accountability is 15,000. Okay. How about our cash counted? Cash counted is the amount of cash and expenses counted from the fund. So for example, you have here your petty cash box. So you imagine a petty cash box as a cash box, a normal cash box, and inside that is your petty cash fund. So inside that box should be the expenses from the fund in the form of receipts or vouchers and the remaining currencies and coins. So you count the total of the expenses and you count the total amount of currencies and coins. Your cash counted must equal to your cash accountability. Your cash counted must be equal to your cash accountability. But what if your cash counted is greater than your cash accountability or lesser than your cash accountability? If it's greater than your cash accountability, we call this one as overage. There is an excess cash count. Overage, there is an excess cash count because we must only have 15,000, but you counted 15,200. So this 200 is an overage. How about if ever our cash counted is lesser than our cash accountability? So let's say our cash accountability is 15,000, but we only counted 14,650. Therefore, we have a shortage. So, if there is an overage, ibig sabihin, kailangan mas mataas yung ating petty cash fund. So, what should be our entry? Mas mataas daw yung petty cash fund mo. So, ibig sabihin parang nadagdagan yung cash mo. So, your entry is debit, petty cash fund, and you credit cash short or over account. Cash short or over account. So the cash short or over account is a temporary account. Why is it a temporary account? Because later on, we try to learn whether the cash shortage or overage should be attributed to the entity or not. Okay. How about if that is shortage? Kulang daw yung cash accountability mo. If that is shortage, you credit petty cash fund. Okay. So what is your debit now? Cash short or over. Cash short or over. Okay. Take note, overage increases our cash, therefore you debit the PCF. If ever shortage, it is shortage, you decrease the PCF. So you credit PCF. Now, after knowing the effect of our shortage or overage on our PCF, we need to dispose the temporary account. So how do we dispose the cash short or over account. How do we dispose the cash short or over account? So it depends whether that is an overage or it is a shortage. If that is an overage attributed to a particular entity, so let's say that overage pala ay kay cashier mo, you will have a payable. You will have a payable. But if ever that cash short or over cannot be attributed to anyone, so you cannot attribute it, it is considered a gain. Okay, so you have an overage. So let's say you try to look kung kanino ba talaga yung average na yan. So you investigated, you learned it is for a particular entity. Nalimutan lang palang kunin yan ni cashier o kaya nakalimutan lang ibigay kung kanino. You need to set up a payable. You need to set up a payable. How about if you cannot really attribute it to anyone, then you treat it as a gain. How about if it is a shortage? If it is a shortage, and again, you can attribute it against someone, then you will have a receivable. But if you cannot attribute it, then you treat this one as a loss. So we go back to our entry on the overage. Our entry on the overage is debit, petty cash, fan, credit, cash short, or over. So if ever it is a payable, how should we dispose the cash short or over? We debit, cash short or over, we credit, accounts payable. But if it cannot be attributed, what is our entry? We debit, cash short or over, and then we credit gain. How about if that is shortage? Our initial entry is debit, cash short or over, credit, petty cash fund. So if ever that is shortage and you can attribute it to someone, you treat it as a receivable. So debit, receivable, credit, cash short or over. How about if it is a loss? If it's a loss, then you debit loss, you credit, cash short or over. Take note, you can only place it as receivable or payable once you can really attribute it. Of course, how can you attribute it? You first try to investigate. You try to investigate who really owns that overage or shortage. So who owns that overage or who is liable on that shortage.